Today I'll be going over my portfolio one more time. I actually made a very good buy today this morning. I was planning to do it on the video, but it was too good of an opportunity for me to pass up. So I'll show you that, and then I'll just dive into what my portfolio has been doing. Actually, let me just go over what's been doing so far. So for the past day, I'm up $1.34. For the week, I'm down 46, down 100, 3 months, and for the year I'm up 90 bucks. So not that bad. I have a few stocks in here that I probably shouldn't have bought, so I'll see. Air Canada was just on the whim thing. I only got 2, but it's down. I got it for an average cost of $16.92, and it's at 15. So I don't know, maybe airlines will come back, I'm not sure, but meh. Be honest, this one I should have gotten a lot more off when I was doing it, but didn't have enough capital to throw into stock. So around that time, something else probably caught my eye. EPY 8, got it at 13. This one I should have gotten more off. Should have probably got at least like 20, up 30, 39. So that's good, and it pays a dividend monthly, I'm pretty sure. So Cineplex, this one I got before, or no, I got it after the pandemic started, hoping that it would go back up, but it's may go back up, may not. I might just round this out to 10 shares and just call it a day on that. It's not something that pays or anything like that, so I'm not super interested in it. DFN, this one I'm planning to get more of if it falls in within my average price range, or just if I see it at a decent price, because it's at $5.83. I find that to be a little more than I want to pay for it, because it's not something that is reliable with its dividend payments, so I'll have to wait for that one. Enbridge is a stock that I transferred over from when I was using Questrade, so I bought it early in the year when it was actually at a decent price. So my average price is pretty high. So yeah, 38. I'm hoping that I can have some money so I can bring my average cost down more. So when it does rebound, I stand a bigger chance, a bigger gain, instead of just breaking even with my total returns. But that's on the watch list. This one, yeah, this one is, as you can see, quite garbage. I'm hoping that it goes back up to even like $5. If it goes to $5, I'll probably sell off all I have, put that money somewhere else, just take the loss. After Pipeline, got it at 8, also pays a dividend, pretty solid stock. Even though all companies have taken a beating over the pandemic, I'll still put more into this. This is a pretty good stock. Norview Properties, this one I also like. All the companies that are up right now in my portfolio are companies that I should have bought more of, but I didn't have the money to put it in, so I just had to watch as the prices just soared back right up. So this one I got it at an average price of 9, so even if I buy it now, my average price won't change that much, but I'm hoping that it does another slip and I can get back into this. This is Plaza REITs. This is a REIT stock, pays monthly. I have 27 of it, got it at $3.20. It's a monthly payer, so it's doing good. if I see this if it goes back to 320 again or under 320, I'll probably get some more shares of it, because it's a pretty cheap stock and it pays monthly. It has paid consistently throughout the pandemic, so there's no real need for me to sell it. Just keep adding to my position. And this one right here, Penumbra, this is the one, Pembina, this is the one that I actually got a pretty good buy on today. Today it fell down to 28.12, so I put a limit order buy for 5 for 28.12, and that order was filled. So it kept my my first buy was, let me just show that, go back here, activities, filter, buys. Okay, so my first buy for PPL was here on October 7th. I got 1 share for 28.14, so that was a good starting margin for that. And then today I got 5 shares for 28.12, so that kept my average price the same, which was good, because right after buying that stock, let me just go back to it, click. Okay, so after buying that stock, when it went down, it went back up, so I made $2.56 on that. And I'll show you once I update my spreadsheet with this in it how much extra income that brought me. But this is the one that I'm focusing on right now. Over the next few weeks, or any loose change I have, I'll throw it to something else, but this stock is the one that I am trying to get as much as I can off. Well, at least to 25 shares, then I'll probably move on to something else. And RioCan has been going back up. It already reached a threshold that I have set to earn $5 every single month. But if the price, I'll probably round this out to 50. If it makes another major dip again, I'll buy some so I can get my average price down a bit more. Because over the 5-year mark, you'll see that it has dropped a lot, from 24 down to where it is right now. And the pandemic, this steep drop off right here, all the way from 27 to $14.89. So that's a big drop off. But I feel like RioCan will survive the pandemic and will remain strong, because it has paid its dividend right throughout the pandemic so far. So I'm hoping that stays the same. Suncor was also a transfer. Yeah, this was another stock I transferred over from Questrade. Yeah, I should definitely put some more into it while it's down, because it has been paying its dividends as well. This stock is the one that I went all in on when I saw the price of it. So 56, I got my 10 shares at average cost of $56.37, so that's not a bad, that's a 27, almost a 5% return. And this one does pay a dividend as well. I'll show you how much that one pays on the spreadsheet. And yeah, it's Canada, you need banks, so I think that's a good one to hold and to add to. VDY is also one that I need to add to as well. This was another transfer over as well. That's why my average price is so high. So I'll have to get that down. And this one I got burnt on. Well, not really burnt, because I got it cheap. 10 shares. So it's up $3, but over the year, this is where it usually is at. $21. So I'm hoping that this pandemic goes away next 6 months or so and stocks do recover, because this would be a nice boost to my portfolio. But if the price does go back anywhere near 318, I'll be definitely grabbing some more. This one is a ETF. just a random ETF that I picked. It's a monthly payer as well. So most of the ETFs in this that I have are monthly payers, just so it can be the base for my portfolio. Because the aim of this whole thing is to get a steady monthly income. So that is what I am hoping will happen from this. XRE 11 shares, average share. So this one right now is lower than my average. So if I can get like 2-3 more shares, it'll drop this number lower. But over the year, yeah, so this one has another steep drop. Most stocks have had a huge fall off. So from 20, yeah, like 20s all the way down to where it is right now, 14 and 1450. So that's a very big drop off. These are just a few stocks I'm watching for, but yeah, we'll see how that goes. Activity filter, dividends. So my dividends for October have been not bad. $5.04 from RioCan, 39 cents from VDY, 18 from VRE, 50 cents from DFN. Plaza paid me 61, Northview paid me 27, and ILP paid me 16. So not a bad month so far. But I will show. Yeah, so not a bad month so far. Alright, let me show my spreadsheet. Okay, so this is my spreadsheet that I'm using to build a base for my portfolio. So with all the stocks I own currently right now, that's how much I get every single month. So PPL is the one I bought today. I bought 5 shares. That brings me to 7 shares. So that brings me to 1027. And there's a few here that I haven't added to yet, but this is what I am working on to get me to my $60 or over in dividend income every single month. And that's what I am working towards. Alright, let me show you guys like my complete, all the stocks I own and how much that produces. Let me just move over to here. TrackYourDividends.com. This is a free tool. There is a paid version that shows you how safe the stocks are and however and whatnot, but I just use it to track this right here, my dividend yield, my annual income. So right as it stands right now, my portfolio is at 3,129 with a dividend yield of 7.37 and a yield cost of 6.77 with annual income of $230, which isn't bad. That is better than what the TSX is performing at right now. So not bad. I have made some good stock picks so far. So some of them, a few of them are down. The ones that have transferred, like this one. This is why it's always good to get your average costs as low as you can. So let me just update it with what I bought today. PPL. Okay, that is totally wrong, but we'll fix that. So now we got 7 shares right now. Average cost of 28.14 and edit. So that brought me up to $241 and brought my dividend yield up to 7.29. Go back over. Yeah, annual income of $15.25. Let's recheck that. Okay, this is saying that I have a bit more than that, 17.64. Maybe there's some rounding in that, but hey, it's money, so I am not complaining. Average cost. Why is it saying 36 there? I'll have to check that out and see why that is the way it is. Actually, let me just do this. Let's delete that. And let's just new holding. PPL. 7 shares. And 2814. Add. I think it's maybe pulling American. Probably what is happening. So I will have to delete again. Delete and add. So ppl.to. There we go. ppl.to. So that should fix that problem. Cost basis is 2814. Add. Okay, there we go. Problem solved. Yeah, so yeah, with most stocks that trade on the Toronto Exchange, you have to add the .to to it to let programs know, or to let any brokerage that you use know that you're buying it from the Toronto Exchange. Alright, so yeah, that is where I'm at right now.